Good morning. My name is Maurice Crespi. I am managing partner of Schindler's Attorneys. Schindler's Attorneys is the co-founder of COBRA, together with IQ Business and Engaged Business Turnaround. COBRA has been formed originally by the three partners, but we now have over 50 partners who've joined COBRA with a view to assisting businesses in distress through various professional disciplines. In fact, most professional disciplines are represented by parties who've joined COBRA. So the partners have committed to assisting businesses in various ways. We've set up a knowledge base, which you'll find on the COBRA website. That's www.cobra.org.za, or you can arrange private Zoom meetings and with any of the partners, representatives, to discuss the issues you're going through. There are specialized turnaround specialists such as Engaged, who are quite happy to sit down and go through issues that you may be having with your staff. We have labor consultants, we have LabourNet, we have Schindler's Attorneys. So please bear that in mind. We're here to assist, and we do so in various ways, not only by getting actively involved, but by putting together a knowledge base. We have the most comprehensive knowledge base on our site, and importantly through webinars such as the present webinar. Today we're joined by Catherine Young. She's the founder of Thinkroom, and guests Keet van Zyl and Kumaran Padayachee, who will be discussing how to stay flush in the pandemic rush. Before I hand over to them and introduce them, let me briefly mention my co-panelists who we have on today. We've got Emma Marseille from IQ Business, Renee Klopper from IQ Business, and Gary Barachowitz from Schindler's Attorneys. A bit about our speakers today. Catherine is an entrepreneur with executive level experience across a number of businesses, including a successful corporate career, holding various senior and executive positions in companies including Deloitte, Chevron, and SAP Ariba. As the founder of Thinkroom, she's involved in intrapreneurial ecosystem development across Africa and the UK, as well as acceleration programs through her co-ownership in Grindstone Accelerator. Then we have Kumaran. Kumaran has been funding SMEs for the past 23 years and has an intimate understanding and expertise in SME financing. He is CEO of Spartan SME Financing, an alternative financier that only focuses on SMEs. Spartan's niche financing covers growth finance, specialized asset finance, and bridging finance. He is a co-panelist on both the popular Big Small Business show and the SME funding show on Business Day TV. And lastly, we have Keet van Zyl. Keet is a venture capitalist with extensive high growth investment experience. He structured various private equity funds in Southern Africa for a US fund of funds investor, and worked at industry leading companies such as Procter & Gamble, Investec Bank, and he founded Knife Capital in 2010. So you'll note today that the guests are very finance orientated, and let me just briefly mention, in the context of business rescue, COBRA is not about business rescue. COBRA is about keeping you out of business rescue. But in the context of business rescue, and we're here to tell you about business rescue, there is such a thing known as post-commencement finance. It's a very, very important tool in terms of the Companies Act in order to get a company back trading. Now, the beauty of post-commencement finance is that it gives you additional security. It renders you super preferent as the lender. We have weekly shows where we go through business rescue in general. Look out for those, because we'll go into more detail on PCF and the mechanics from a statutory framework point of view. But for today's purposes, I'm going to hand over to the team. Thanks so much, guys. Thanks for being here, and thanks to the attendees for joining. Please ask questions. That's the point of the webinar. Post as many questions as you can so they can be dealt with after the presentation. But until then, enjoy. Thanks, guys.
Thanks so very much. Lovely to be on, and we're going to just spend the next 50 minutes with you, and share what we have, and let's see how that goes. So if you can just allow me to share my screen, and we should all be good. Okay, so thanks for the introduction. I'm Catherine Young, and really it feels like I've been working in entrepreneurship for the last 20 years, and I also say that's why I'm only 25, but that's why I look so old, because I've been working in entrepreneurship, but I absolutely love it. And really, it's COVID has been so interesting for all of us, and what it's brought. And this particular quote truly struck a chord with me. A couple of months back, I was preparing for a presentation, and just before the lockdowns globally started, and when the machine grinds to a halt, the cogs themselves begin to wonder about their function. And I gave this quite a bit of thought, and wondered now, in the light of COVID, when the cogs do themselves start wondering about their function, because the machine that we used to know and understand and really just worked with has come to a halt. And it's a new machine, and it's a new way of dealing, and we have just found that working with businesses across Africa and in the UK, that this has been a very interesting time for all of us, and may we live in interesting times is really not a saying I wish on anybody after what's just happened. But I think the reality is, each one of us has been on a personal journey, definitely with COVID, let alone in our businesses or in the businesses that we support. And the reality for me has really become this of, the machine will always be changing. If it's not COVID, it's going to be something else. If it's not this pandemic, it may be something that we've not been expecting. Who would have thought? Who would have thought in December, when, for those who are in the Southern Hemisphere and on the beach or on holiday, that we would literally not have an aviation industry 3 months on, and that they would be struggling. So from the biggest really right through to the smallest, who would have thought there would be a debate in the newspapers about somebody trying to just sell achar for a daily living and getting into trouble for doing so. So really, we've all been impacted, large or small. It really truly doesn't matter. And the cogs are asking, so what now, and where to next? And we're hoping that over the next 50 or 55 minutes, that we can just talk about this topic now of funding. When we work with businesses, really there are always the four things that we say they can't go without, but the two uppermost are the following: access to money and access to markets, or access to customers. And so over the next 4 weeks, we will be sharing some of these insights with you, and in how it's impacting funding markets. And then the other two are, of course, access to information, and access to tech, and helping your people get through it. But the reality is, we're going to be speaking today about the funding bit, and we have two of the best in the industry that will be joining me shortly, and that's why we have them. I think we've tried to cover both debt financing as well as funding from a VC point of view. But allow me to share these 5 thoughts with you just before we get going with the guests that are here. You know, when the pandemic hit, these 5 different phrases were said from people quite close to me, in either a work perspective or in a business perspective, and it's resonated with me more and more as I mentioned, as I've been trying to figure out this new machine and how the cogs should be working. And I really think we've got a very good machine that's much more nimble right now in working with the businesses that we work with. But the first question is, and it's a very dear work colleague of mine. He said when we were about a month in April, we were just scurrying to try and get portfolio companies to survive, and rehashing and seeing what they should be doing. And he said, there's going to be a question about, like we had it in 9/11, about where were you when 9/11 happened? And there's going to be the same question of where were you when COVID happened? And it was a very rhetorical question, but it's an important one, because it's a question that forces us as business owners and forces us who are working with business owners right around the globe to really take this seriously to heart. And where we were when this happened is going to be leading on to my next one. Somebody else said in the beginning of this pandemic, we will definitely have a lot of stories to tell. And what are the stories that we are going to be telling? Very early on, I read a piece just the other day. Very early on, there was this, okay, let's do this. The 5 steps of processing any change. Let's do this. We will get through this. And we were all house partying on Friday nights, and we were doing many family calls over weekends, and soon the fun fizzled out as the impact of finance started to really become an issue, as the impact of customers no longer being able to commit the way they used to have become an issue. And those stories that we are in the making now and will continue to make. I mean, what will those stories that we will be telling? It's a case of do we keep on keeping on, or we just say, well, COVID's hit and that's the end of it. So that's the second one that's really resonated, and I want to pull it together at the end as I introduce our speakers. What we've also learned is that from the aviation company example that I've shared with you now, up to somebody just selling a hawker on the street, selling enough to get through their daily needs. This pandemic has definitely leveled the playing fields, and it's leveled the playing fields for all of us. And it's definitely not those with the most money, or those with the perceived most money, or those with the perceived best approach or ideas. The machine has changed, and I want to encourage every single business on this call. We've literally worked, we're actively working with about 35 companies currently that are whilst in the time of pandemic, and they are in some form or fashion just trying to get through this. And really, the playing fields are level. There is no more differentiation other than those who will keep on one step longer than those who don't, and find different ways of finding money, and find different ways of finding customers. So I want to just put that piece of wisdom that somebody shared with me down as well. The playing fields are level, and we should approach it like that, especially in the dark days, because the research now also says we've gone through the hype of, oh goodness, this is interesting, different way of living, we'll get through it soon, and now as businesses starting to slowly start switching back on, the reality is that the psychological impact for us is going to be immense for many years to come, because the finance impact is only starting to hit us. So this is the other thing. Remember that the playing fields are level, and Kumaran and Keet will definitely share some of this with us as well. The fourth thing I wanted to just share is always find a helper. There's somebody I follow on Twitter, and she always posts these about she's in the startup and scale-up world and helping businesses actually across the globe. She has a global position, but she always tags her tweets at the end, if it's applicable, with always find the helper. And what's interesting is that the pandemic, in terms of funding especially, the biggest rhetoric we always hear from businesses who need money are the following: no, but I can't access the money because the money's never available to me, or no, there were many schemes, but we weren't good enough, or we just didn't even get a call back, or traditional banks, like we know, would only fund about 11% of the market with business requirements as they have now, and I'm speaking pre-pandemic, and so there isn't money about. The reality is that there are interesting ways to find the helper, to find different sources of funding in different ways. And very often the source of funding is through a customer that gives you extended credit terms, or the source of funding will be in somebody that you needed to get money paid back to, and you just ask for a little bit of leeway, or a customer that pays early. Have you gone in and considered those other sources of funding other than just the traditional ones we think about? Because because always finding the helper is interesting. How very interestingly this pandemic has brought different things out in all of us. And interestingly enough, there are very creative ways of funding and financing going about at the moment, actually across the globe. Have you taken the time and consideration to look at those? And then lastly, this is something I've lived my business life with forever. We're all running around. We're always busy, every one of us, as you are also. But it's always that premise of more than ever, we need to know what comes in and what goes out in our business. And I know that may sound so simplistic, but just hear me out. So that is another source of short-term funding at the moment. All of our travel budgets have not been used because we've been unable to travel. So although that's money not used, it could have maybe filled another hole. So for me, it's more than ever, as a business owner right now, do you know more than ever what's coming in and what's going out, and do you have the tabs on that? And it's a case of making sure that we track that very closely. So in conclusion, and then I'm going to ask Keet and Kumaran to turn on their videos. There's so many pieces of thought leadership currently on finance and funding and how to get money and how to access it globally that really there's just too much information. So I decided to share just this one study with you in conclusion of this introduction. McKinsey did the study, and this study is about, I think it was published start of June or end of May. And really these five points here are the 5 points that they feel have truly greatly helped businesses in terms of at least thinking about different ways of funding and financing their businesses. So we know there were some immediate provision of financial reliefs, both from a public and private sector perspective in South Africa. We know that those funds were oversubscribed within the 4 days by anything between 2.8 and 4 times, and we understand that. But our panelists will share with us a little bit more about some creative ways of going around this. So this point for me is important to say. Let's not think about funding and finance in the way the old machine and the old cogs used to work, because we know that machine has changed. And how do we apply our minds, cut costs where we have to, be creative where we have to get this provision of financial relief, not from a place of, oh, I didn't qualify, but from a place of, okay, so I didn't qualify, let's make another plan, because it's surely not going to be the cleverest who survive, but those who just keep on keeping on the longest. And of course, we're going to have some businesses that won't make it. And then, if that is the case, what is the plan to get back up? The playing fields are level, remember, and everybody is in exactly the same situation. There's some incentivizing the lending to banks. Literally the big four in South Africa, we know there's been some good incentives. The interest rates are kind at the moment, and I would love in the questions, when we run questions at the end of the session, to just give some feedback to us in terms of have you been able to access bank money and how that has gone. Accelerating receivables, we've spoken about that. I'm not going to belabor that point any further. And then the support from the larger clients. It's absolutely fascinating how, because we are all in the same boat and the playing fields are level, I don't know about you as business owners, regardless of size, but the conversations with my clients, as an example, have changed. In fact, for the first time, we have conversations at a different level. For the first time, they are so transparent. And please don't miss our session that we're going to be doing on sales, because we're going to share a lot of this in there. But for the first time, these clients are asking, are listening in a different way, and we are asking in a different way. And many of the businesses that we work with also, it's now a case of, okay, so we're all in this together. How do we continue this new new machine to continuously merge into something that we can just be cogs in the machine and make them work. And then, of course, the last one is the larger one. And I know, like, as an example, both Keet and Kumaran are very, very active in the space of trying to help address structural challenges for our small businesses, especially in South Africa, and how that is about. Thinkroom ourselves, we've been on a couple of task teams to try and impact how structural challenges can be improved to help small businesses, medium-sized businesses to just absolutely access funding easier, access help easier. So I hope that overview has given you some perspective of, yes, confirming the landscape has changed. It's almost like saying water is wet, but the different part to that is, if the landscape has changed, we have a very clear choice. We accept it, and we say this distress is going to go on and we're not going to get out of it, or secondly, we find these alternative ways of making just keep the money coming whilst the pandemic is on and afterwards. So I want to introduce Kumaran and Keet, if you don't mind switching on your videos, and as soon as your vids are on, I will stop sharing from my side. Fantastic, thanks, Keet. I can see you, and Kumaran's coming on shortly. So a very quick overview. We've the business development, the entrepreneurship development space in South Africa is really small. We know that very well. We have only a few players, and then we have a few very good players. I want to start with Keet van Zyl. He's really founded Knife Capital with one other partner. I don't know, Keet, you'll tell us, many years ago. And Keet's one of the venture capitalists in South Africa that really just says it like it is. I respect that, but you can always get the honest truth, the lay of the land, and just the realism of funding and how they fund and how they not fund. And they always have a glass of champagne, whether they celebrate the successes or not. So thank you, Keet. It's lovely to have you on. And then Kumaran, I think your video is not on yet. No, but I'm sure you will.
It's been disabled by the host.
Fantastic. So we'll just get you to, enabled then. And then secondly, Kumaran is from Spartan SME Finance Solutions. And Kumaran and I, those partners, business partners, not in the legal sense of the word, but those people that you do 2 or 3 all-nighters with, because you have to get a couple of proposals in, and you just keep on keeping on. He's that guy, and I have a lot of respect for the work that you do, Kumaran. So Kumaran and Keet, welcome. I really thank you for being on. So I'm going to start with, of course. So for the audience, Kumaran works in the debt finance part of this industry, and Keet on the venture capital side. So we're going to be starting with this, and I'm going to ask both of them the same questions, but they will give us perspectives from different lenses. So Keet, let's start with you. Really want to just get a very good overview of just your immediate, when the pandemic hit, what were your experiences, and what was happening in the mind of you as a venture capitalist, and how did you go about it?
Yeah, look, I mean, I think none of us could have expected where we're sitting today, as you said before. For us, we were a little bit lucky in the sense that we've got a London-based office as well. And the pandemic sort of hit a bit more seriousness in the first, that, every week counted at that stage. So our partners that side were like, guys, we're already working from home over there, when we were like, well, all still in the office and didn't quite, I think the realization of those cogs turning and what is hitting us. So from a first perspective, we were a little bit forewarned by about 2 or 3 weeks with that. We followed, first making sure everyone's safe, but being a venture capitalist, we have a portfolio of investee companies, and we'll touch on some of the examples later. But what our first sort of port of call, after making sure that us and our staff and everyone sort of looked after, is to make sure that we help these companies through this pandemic, so however long that took. So we really spent the first 2 or 3 weeks negotiating with our investment committees, with our board, from a fund perspective, to say, how do we balance because we're an equity funder, so I mean the difference between debt or equity or mezzanine or convertible, so we generally, what that means is we would look at innovative businesses which are very high growth. We would typically invest between 10 and 30 million rand, but we would put that into the business's growth funding, and they would use that capital then to grow. In exchange, we would subscribe for some shareholding, which is usually a minority shareholding of, let's say, 15, 20, 26, 30%, depending how much the valuation stacks up. And and then we have a seat on the board. We're very active at shareholding, but we're not really, our return expectations times money and all that is not geared for saying, okay, guys, it's COVID, so let's give you a prime loan, for the interim, because that opportunity cost of funding with all our funders, 5 years from now, they're not going to look at us and say, I'm sorry, that you didn't get your expected returns, but yeah, there was COVID, so we had to balance return expectations with innovative funding products, because we knew that it was going to be hard, and we'll touch on that as well, to raise funding out there. So that's sort of what we focused on, to really get our heads ahead of the game in terms of what could we do as funders and then also as business partners to make sure our businesses not only survive, but also actually start with new business models and all that.
Yeah, I love that. Thank you, Keet. And I think that was one of the big reasons why, that I thought it was so important for you on this call, because really having watched, because we're on the access to market side more than on the access to funding, you're the expert on funding. We watched how you very quickly realized that the machine was a different machine and the cogs had to turn differently. And I really respect that very much. And I'm looking forward to you sharing the examples later. Over to you, Kumaran. So from your side, when this hit, what happened in your world and with the businesses that you were financing?
I think we're definitely not immune. We weren't immune compared to everyone else. And so after the hygiene issues of making sure that we're fully operational, we went into our own lockdown a week before the country went into lockdown. We've been fully operational in that sense. And then we focused on a few things. The one was some clients that we envisaged would be asking for indulgence or reprieve. The funding we do is from R1 million to 25 million rand. So you'll have some people paying you 100,000 rand a month, some people paying you 2.5 million rand a month in installments. Those are big types of repayments. So fortunately, not all our clients, or very few of our clients, are consumer retail playing. The majority is industrial and B2B services. So we had to we put a customized process in which to handle those requests. There weren't many, but importantly, we needed to manage expectations around that. So that was the one thing we did. The second, we created something called a relief registry. It's on our website, by the way. And that was for SMEs at large across South Africa, which is a updated web resource of all the different private sector and public sector relief programs that are out there. So that, because people don't know couldn't know at that time where to find things and what was the status with the sites up and running and all of that. So that was a resource that we created there. Then we had to also get a bit brave, ourselves, and think about how do we lend. So one day after the country went into lockdown, we wrote our first loan. Admittedly, so I think there was a 26th lockdown, 27th first. Admittedly, that was for an existing client, and it was about 3.2 million. And then, but then we've been lending in the main to existing clients, not for relief, more for operating, and some have been essential services right through the lockdown and beyond. But then the trick for any funder, including ourselves, a debt funder, was to say, it's how do we look at new clients now, and what do we do there? So, we created something called funding in the fog of war. You got to say that slowly because that FOG can sound like something.
Funding in the fog of war.
Yeah, funding in this fog of war, because we're not involved in relief funding. That's the relief programs, the public sector, and those types of things. And so we are a commercial kind of lender. But how do you do that? Because this is a fog still. You can't see the brake light 3 meters beyond you, right? And so what that means is we lend 1 to 3 months, we do up to 12 months, and we do up to 5 years. So how do we, as a funder, lend someone 3 years or 5 years when you can't see the brake light in front of you? So it meant we had to change and relook at, so we called it funding in the fog of war. And we said a new who, a new what, and a new how. Some kind of just contextual change. And so we started looking at the SMEs in segments that are COVID type of it. So, could be essential services. Those that is another segment we called opportunistic trade, maybe PPE and that kind of stuff. Another one was certain businesses that would be, from a long term, boosted from this trend that would get a catalyst, an uplift from COVID. There would be some that would be temporarily boosted, right? So these are all businesses we could see, we can lend, they can pay us back in a short space of time where we can see the brake light of the car in front of us. So that was some of the things very difficult that we've been doing. And so we've upped things like our purchase order funding. So even though we do long-term, mezzanine, various kind of debt funding, but the purchase order funding, I'll talk about that in a moment, how that's where I see the nature of the requests in the market, South African market changing. We're now starting with, Schindler's had mentioned post-commencement finance. We're starting with post-commencement finance now for businesses in business rescue. Maybe we need our head examined there, I don't know. Slightly in a drug state to be looking at that. But again, adapting, So just very quickly, the narratives that we looked at early on is that the one of a rock falling in a pond and the ripples coming in. And it's easy to see the splash. It's obvious in that moment, but it's hard to kind of close your eyes and imagine where the ripples are going to go through. And right now, we're all still on this hamster wheel, and we're not doing qualitative thinking, myself included. It's very hard, to see that. The other image is one of, you can't swim, you fall into the deep end of the ocean or the pool. And normally what happens is human thing, we will be gasping for air, trying to do all kinds of things until we figure out how to tread the water. So the initial phases were at a consumer level, we were hoarding toilet paper, right? Or entrepreneurs were taking money from the excess bond, or if the overdraft for the business wasn't used, take it in case the bank says they're going to pull that. Just hoard. That's a different form of hoarding toilet paper. Right up to the corporate level, I read in Bloomberg and Financial Times, one of the two, I think it was, that A&B, InBev, and Boeing, this is in early in the year now, probably early March, pulled down on a $9 billion and $13 billion facilities that was just, hanging in there, just as their way of hoarding a shitload of toilet paper, right? And so this is a behavior that cuts across from consumer all the way through. And that may have been getting cash in, but now we have to learn to tread the water. And so what does that mean, beyond relief? And I'll stop there.
Fantastic, Kumaran. I love that. And I think on the debt financing side, exactly the same. I think of those in the market, you have really gone and also approached it differently and understood very early on that the machine is different. And I know that it's the cogs are now working differently, so it is high risk. But for those who are on this call, I think that's the encouragement. With literally, there are funders and financiers that are thinking differently about this. So now, Keet, on that note, over to you. So can you share with us 2 or 3 of the actual real examples of what you had with some of your portfolio companies, what you did differently to get them through?
As I said, we did a assessment of our portfolio. It was also very important for us, as Kumaran also said, not to just go into saving and protection and survival mode. I mean, at the end of the day, you can't save yourself into prosperity, specifically if you've got a drag on your returns and all that. You have to, and specifically, I mean, you are talking to, I guess, to risk funders, someone over there that's funding companies out of business rescue, someone over here that funds for businesses at very early stage with massive dreams that never pan out exactly as per that Excel spreadsheet, I must tell you. So we are a bit more on the risk-taking side of finance. And from that perspective, also just made sure that our pipeline of investments that we actually continue with due diligences, continue with investments, and so forth. So I mean, I think the one example is for one of our portfolio companies. Let's just be careful what I say. We in the process of a fairly big international fundraise, and at that point, it is quite difficult to then imagine if investors are going to sit on cash now. They're not going to take necessarily risk in companies on the other side of the world, just to make sure that the investors that we have lined up at that stage and the term sheets signed, how do we make sure that we manage that deal very carefully and assure those funders of a business plan that we almost not ourselves sure of what's going to happen with that business, So, happy to say, touch wood, that deal is kind of going in the right direction, and hopefully, yeah. So that's the one. I mean, we looked at our portfolio, as I mentioned, and luckily we've got in our portfolio two companies in the education technology space. A company called Snaplify that's involved in textbooks and online education. And all that in South Africa as well as Africa and Kenya and all over. So really, worked with Snaplify to see what we can do there, because obviously there's an opportunity, So one also can't look a gift crisis in the mouth type thing, So yeah, worked with that. I mean, we made actually textbooks free on that platform in South Africa, and now in Kenya for the rest of the year for anyone who wants it. So basically, as you were saying in your intro, where were you when COVID happened? And on the one hand, we are commercial funders, but on the other hand, we also must need to make sure that society benefits from our actions, and we obviously create and advance our brands from that. Skill Up is another brand involved in more tutoring and online learning, and they've got models and stuff. So that also, same, really looked at some of their alternative products, which is more in line with teaching software and methods for different tutors and mentors, how to scale that internationally. And that also just took off sixfold. We've got a business in the pharmaceutical value chain, or pharmaceutical cold chain, so again, with vaccines and increased awareness on the quality of medicine, not just and how that all figures. So there's massive opportunities there, and we increased our pipeline tremendously on that business. But we also have businesses like Quicket, which is let's call it a ticketing business, or the equivalent for those who are not from South Africa on this call of Eventbrite, and suddenly they went from record year-on-year growth. We just basically had our strat sessions in January and February, and sort of high-fiving ourselves of achieving our budgets and all the rest of it, and you're not allowed to gather, which basically means your revenue goes. You're not allowed to have any clients. So suddenly, we have a business which is in real. It's a great business model, and we know it will return, and we know we need to help that business survive. So on the one hand, that team, I must say, very proud of the way they immediately jumped into action, did all the cost savings, worked with alternative models, and they've really launched webinars, online events. I think last Friday they had a Mark Lottering, the comedian event, and there were more than 16,000 people that sort of paid for ticket event on that webinar, which basically, to fill a room for a comedian of 16,000 audience. I mean, think about it. So there's opportunities in taking kind of those things online. But one must also be careful, at the moment people can't go to events, so they have to do it online. So we're also aware of the bit of a false economy, and also launch things like fundraisers, the equivalent of crowdfunding and those type of things, which we have the perfect platform for, which is cost advantages. So interestingly, we went in the last 2 months from sort of one revenue stream very much in line with events to 3 different revenue streams, and the one is down, but the other 2 went from 0 to up. So I think there's many more examples, but I think the overall message is basically to get creative, to innovate, to protect. But if you are an entrepreneur, you can't save yourself into prosperity.
I love that. Can't save yourself into prosperity. Keet, just a quick follow-up question on that, and then I'm going to go back to Kumaran. And how big were the pivots? Were they small pivots or big ones? If you can just briefly speak about that.
Look, in some, it depends on case by case, but mostly they small and measured. You know, I think one has to also be prudent in terms of how you know, I think our message to our entrepreneurs were do things differently, but don't do different things. You know, and there's a very subtle but important difference between those things. You know, because you can't suddenly build up an expertise and a brand into this direction, and then something happens and goes wrong, and suddenly you just suddenly try and raise finance or clients or whatever into a total different direction. You know, for some business examples, it might be necessary, but in our case, it was more to say, okay, guys, efficiencies. You know, how do we do what we do anyway differently? So for most part, it was sort of incremental, but incremental with drastic results. You know, I think yeah. So. Yeah,
that's fantastic. That is really great advice. Do things differently, but don't do different things. I think that's very good advice in terms of a measured approach to pivoting, because we are seeing many of the businesses. One of our businesses on the Grindstone cohort, Thinkroom and Knife of our parents of Grindstone and partners of Grindstone. And in one of the Grindstone cohorts, they had a ride-hailing service solution, and remember, Keet, they had to literally also do the same thing but pivoted and then started transporting essential services workers just to keep the boat afloat. Thank you for that, Keet. Kumaran, do you want to just share an example or two with us in your world, what happened and how some innovative way or different way that you got financed through and where the business kept on keeping on?
Yeah, I'll share 3 examples, and I want to share my thoughts on this pivot thing. It's irritating me a bit.
Fantastic. Why am I not surprised? Fantastic.
Okay, so on the funding stuff, I won't mention names of the clients. They're not important, but the one is a client that's got a contract to repair and refurbish large trailers for an international beverage company. And that was the one that we've been funding through this is tough funding in the lockdown, obviously. And they had assurance about the essential services, which is weird because if you're refurbishing trailers for beverage house, but they had that. And the existing client, we took the risk and we funded them to buy materials and things like that, significant amounts to keep going with that activity against those purchase orders, like a bridging finance. The second one, the second 2 was a bit sadder. The second one was a client that employs approximately 2,500 guards, security guards, like 140 million rand a year business. And one of the state-owned entities delayed a few times in this COVID thing, paying them there. But now, you know, when you have that amount of guards and you can't pay millions in salaries, you understand the impact. So we had to lend the money. So it wasn't paying salaries in distress. It was paying salary because a large did not, delayed. So that is why we had to do that twice to save the day there. The third one is a very different one. Civil construction company in KZN and existing client. And what they had, they've been paying us, but we had to give them a reprieve on R1 million installment during the month of May. And at the same time, this is the paradox, they now could resume construction towards the end of May or something like that. That was going back a few weeks now. But they needed funding to pay their suppliers because their clients hadn't paid them yet. If they don't pay the suppliers, they couldn't release new supply to resume the contracts. So there's a lot of resuming of projects, but the key issue here is that if you haven't paid your suppliers, because your clients may not have paid you, or they did, and you use that money to buy toilet paper, in other words, pay the salaries and other stuff, you now can't resume again because your suppliers will cut your lines. So that was a weird one, allowing an indulgence of an arrears, but lending them a few million. So can I talk about the pivot irritation thing? Okay. So
As you go there, can I just round that one up to say, so how much of your traditional machine rules, how long is a piece of string, had to change?
I think they were actually our format and things like that. We had to adapt. Those are easy things, right? Because we always have a Monday, Wednesday, Fridays credit 2 o'clock in the afternoon to 6 in the evening. You know this, and we do a non-dramatic Shark Tank type of thing where after a credit analysis, eventually the entrepreneur sits in front of us and we eyeball them. We do that via Zoom, but now and again we still go into the office for the odd couple of hours a few times a week just to do that eyeball. It's very different, because if I'm asking you a question, I want to see how Keet responds. His body language may show that you're actually lying. That Zoom doesn't always show that so easily. And so those kind of things, fortunately, lots of the electronic signing and all that stuff was already in place. So I suppose our flexibility and open-mindedness had to really had to change more. It was a more state of mind. Yeah.
Yeah, fantastic. That helps, Kumaran, and it's encouraging, honestly. So
you don't want me to talk about the pivot, eh?
Talk to pivot. Yeah.
Okay. So this pivot story, I believe, is a good and a dangerous thing, in this kind of talks, because maybe a few points. The one is, this crisis is affecting different businesses in different sectors in different ways. It's an obvious statement, but we forget the obvious sometimes, right? So not all businesses have the luxury to adapt so easily. If you've got a highly infrastructure, technical, manufacturing business, it's hard to pivot. The second thing is that, when we all fell into the ocean and we didn't know how to swim, because this situation is an ocean and we all don't know how to swim, the psychology, emotional state, you're in a kind of a frantic mode. So there's no clarity of thought. There's no perspective to observe what's happening. And this notion of pivot is a strategy issue. Strategy is, what are the things you're good at? Like Keet talked about stuff that you're good at. What is your competencies against the context? And if that context is changed, then you need the calmness to pause, perspect, observe it, and then say, using what I'm good at, what can I move? That's not a flick switch type of a thing. And so that stuff is still, unfolding a bit. It's not easy to change your target markets and whatever you. And so we want to distinguish between a strategy-based changing of a target market or product versus something called opportunistic. Opportunistic stuff is great for survival, and we must do that. If you have an opportunity to, how many recruitment or branding agencies went into PPE, and we may joke about that, but good for them, great for them. If you have there's no one to ridicule that if you need to do something to survive. But let's distinguish between that opportunistic thing to survive in a moment versus making a strategic, fundamental change. That's a very difficult thing, and that stuff is still unfolding. And when the context is changing every 5 seconds, those ripples are changing. It's hard to see where the line is to say, all right, it will settle there. That target segment will settle there, or that product will settle there. So, we don't have enough a line of sight, I would say.
Yeah, Kumaran, I love that. I think that's probably the clearest response I've had on this whole pivot thing, because of course it's a discussion in our worlds, but the strategy versus opportunity. So if the opportunities, they go, but we've also found that COVID's not going to solve businesses who were already in a mess, and who's now blaming COVID for that either. So I really like how you say that strategy versus opportunity. So for those on the call, we'll go to Q&A now in a minute. I'm just going to hand 2 last questions to Keet and Kumaran. But remember that if there's an opportunity, go, but that still does not absolve you from making sure that you're true to your strategy, your target market, and the way that you go. Except when the machine changes, first get an understanding of how it's changed. And in this midst, what you've said, Kumaran, it is difficult to do so. So, Keet, over to you for the last formal question. So what now? As a venture capitalist, are you still looking at deals? Are you still evaluating opportunities. What now for those who were in fundraising cycles or were about to fundraise? Where's your thoughts on that?
Yeah, look, I mean, it is a bit difficult. I mean, absolutely, the world has changed, but and what has changed on the fund side, especially on the more venture capital side of things, is it will be more difficult to raise funding, because of the fact that, as Kumaran also said, you can't with that much clarity, that scenario planning, unlikely scenario that's now happened is forever changed the fact that, the impact and likelihood is like, well, what if I lose 96% of my clients next year? It's like, oh, well, that will never happen. It's like, well, you can never say that again. So I think people are checking it out a little bit, and there's more cautiousness on the one hand. Also, investors are protecting their portfolio, and it's not about throwing good money after bad. It is more just, a certain chunk of the funds available would now be, people will realize, okay, hang on, we're going to have to not just look at the shiny new toys. We must really focus on how to work with our current portfolio. So it'll probably be, it's good news for the companies who already have funding partners. A little bit not so good news for people looking for new funding, but in that lie opportunities. As I said, we as a venture fund definitely are taking the more aggressive stance. We are raising new funds from investors on the one hand, and got more creative, and there's also interesting opportunities there. On the other hand, it's business as usual. In fact, even more so, because not to use the cliches, but in these crises, the opportunities arise. If you do look at and you study history around the 2008 crash, etc., some of the biggest businesses out there at the moment have come out of those flames. So this is what entrepreneurship is all about. The true entrepreneurs will find those, not just the opportunistic opportunities, but will see, okay, hang on, how will the world change? And I mean, it's to just use simple things. There's going to be more online collaboration and webinars. There's going to be definitely more of a focus of homeschooling and things like that. Whatever happens, because people are now, okay, well, they've had a bit of a taste of it, and you're going to realize, okay, hang on, those type of things. There's definitely e-commerce. People that before wouldn't have had a taste of e-commerce have now tried to, my mother is starting to buy wine online. She before didn't even trust the internet for anything. So, I think there's definitely winners here. And we as funders are looking for those opportunities, because of those winners are starting off a low base in a new kind of paradigm shift. So yeah, I think the advice for entrepreneurs would just be to look in your current networks first and foremost, because the current funding partners, current angel investors, current relationship, current clients, you mentioned, Catherine, we're all in this together. People are looking for ways to innovate, so there might be some collaboration / merging opportunities. Big corporates are also looking to they have to do something around that boardroom table, and innovation generally goes hand in hand with more nimble, smaller companies that can innovate better. So there will be opportunities to not always run to the traditional funders. Yeah, so start with that. And then I think just last 2 points is manage your valuation expectations, your own valuation expectations, because selling that hockey stick and perpetual growth in year 5 is maybe not as believable as it was, or well, not that it was ever believable, but and secondly, a reasonable, believable growth rate is better than building unicorns right now. Funders just want to make sure that things are going to have reasonable. So it's okay to be a little bit more unambitious, if I can use that term, than trying to just shoot the lights out.
Absolutely love that, Keet. Thank you very much. In fact, you have you actually asked a question on Renee. You've answered a question that Renee asked, so you're a little bit clairvoyant there. What are the small the criteria to be met to gain funding? So thank you for that, Keet. And then Kumaran, over to you. So literally, just your opinion. So what now? And I want to add that with a question that we have, one of the questions on the Q&A. What funding options exist now for those who don't qualify for the government funding, and the banks we know are battling? So what are some of your suggestions here all up?
Well, all funders are businesses as well. And so whatever businesses are going through, funders are also going through. Maybe some may admit it, some may not, but just kind of empathize. When I say empathize, like figure out what's happening. And so your approach on how you approach them is important. When someone is still in the kind of drowning mode themselves or figuring stuff out, it may be a staff member that you're engaging with at a funder, at a bank or something like that. So you're competing for attention. That's the first thing. The second is not to be esoteric in your request, is really to be practical and show in detailed terms how you're going to pay back. So when we have someone that says, I need this funding and for some high level thing, and we cannot see through the cash flows or through something how we're going to see the brake light in front of us, how we're going to get paid back, then that's very difficult to say. It's easier to say. That's why businesses that have got projects, contracts, or orders and stuff like that. And what we're seeing is that in the April and May, the nature of our requests, we get a several hundred requests a month, was mainly, understandably, relief funding, which we don't do, and PPE, right? But now, as soon as we went into this level 3, from the early June, we saw a very different nature of requests for funding coming in. Yes, some relief stuff still there, but it was almost this industrial, technical types of business asking for funding to resume, and not so much for relief. It's like, okay, I need to procure this goods because I need to restart the project. I need to restart that. And so it was, so we could see, oh, you need it for that supplier. Where's your quotes for that supplier? That project, oh, that client will pay. So you can see that. And so that would make funders a bit more comfortable, I would say, because they can see through the brake light.
That is absolutely amazing advice. So we're out of time. Keet and Kumaran, I really want to thank you from the bottom of my heart. I think if one thing, you've also been a voice of reason to me many times before, and especially during this time. And I think what's very interesting, in conclusion then, if I can just wrap on this, the calmness, Kumaran, I think you spoke about this. Now is the time to be calm. Now is not the time to stress. In fact, I think...
see the mug.
Exactly, pause, perspective, exactly, prioritize and plan. And I think that is a good, I think I challenge all of you who are wrapping up on this call today and on the Facebook stream. Why don't you just take the next half an hour after this call and just go pause and think about it? Because the calmness, really, we've seen in businesses, those who have been calm have been getting through this much better than the others. And then Kumaran, your point on the pivoting in terms of the opportunities are fine, but don't forget the strategy. Keet, really, I think what's been very good advice also for those into the new industries like schooling, like e-commerce, make sure that you see the opportunities, because funders are particularly interested in hearing those, but manage your valuation and be very realistic about your expectation about that. And I think the one thing that's been fabulous what you said, Keet, is let's stop unicornness for a while. It's okay to be a donkey for a while, because donkeys work really hard. I always say that, but for now it's reasonable growth rather than unicornness. Can I get help or funding? So in wrapping up then, we're out of time. It's 10 o'clock officially, my time, 11 o'clock your time. So if you don't mind, we have access to the feed, so we'll make sure that we have given you the various websites that you can contact. Kumaran on the debt finance side, Keet and Andrea from Knife on the venture capital side. And then from a Thinkroom perspective, of course, we focus on access to markets. So don't miss our session on sales coming up, because access to customers is another way of just getting money. So make sure that you catch those. And then our parent relationship, Keet, you and I, for Grindstone is an accelerator, and that's coming up. We have a new accelerator program coming up, and we are about to make decisions on who we bring onto that. So I'll post that in the chat. Please go see if you are a lastminute.com company who want to get on to that program, because I didn't say it, but there's a little bit of funding, and there's a lot of help, and a lot of just the best of the best to teach you along the way. So thank you, everyone. It's been an absolute pleasure to host you. Check you out on the next one.
Yeah, thanks, guys. This has really truly been fantastic. I see there's a message here. Can I get help or funding? That's what COBRA is about. So if you do need help, if you do need funding, send an email to info@cobra.org.za, and we'll assist with the raising of the funding. You've seen what's available, how the funding can be structured, and the mere fact that funding is available in this environment is great. So thanks to everybody, thanks to the panelists, and importantly, thanks to the attendees. We have another webinar tomorrow. Please join us. It's Your Crisis, Your Board, Your Assumptions by the SIDAR Global Group CEO, Carl Bates. So please join us for that. Until then, thank you very much and goodbye.